Hello, True Options Masters, and welcome back to the Chart Wrap. It has been a while, hasn't it? Just COVID, holidays. You see this face? This is what happens when someone is isolated with COVID for 8 days now. I'm mostly over it. I got a negative test yesterday. I'm gonna get back to my real life soon. But right now, we're here to talk about charts. Your favorite thing, my favorite thing. And it's gonna be a grand old time. So if you're watching this, you like the content, be sure to give it a like. We like that over here at True Options Masters. Give it a comment if you have something you want me to cover. Subscribe, that definitely helps the channel out. Click that notification bell, that helps the channel out too. Without further ado, let's get right to it. So we kicked off this week looking at the gold chart. Now, I've been watching the gold chart for quite a while. Not a big holder of gold, I got a little bit. I think it's a good part of any person's portfolio, but it has just been narratively broken this year. It doesn't seem to want to catch a bid in the most inflationary environment we've seen since the late 80s, early 90s, before I was alive, dear viewer. So what do we have this week? Well, last week, gold closed really strong. We're looking at the weekly candles here. So it came right up against this very long-term horizontal resistance. And if you've always looked at these lines and go, where does he get these freaking lines? I essentially am looking for touches on the wicks and candles. So you can see that there's actually been quite a few of those. Excuse me. There's actually been quite a few of those over time. We see quite a few wick touches here, candle touch here, and that essentially tells me this is a baseline for the gold price. The gold price is going to chop around this long-term horizontal level, and it's going to act as resistance right now and support for if and when we finally clear it. I'm sure gold investors hope we finally clear this level, but I think it's not too far off, quite honestly, because we came up right against it. We sold off this week. We rallied as high as that resistance again at some point. Let's look at the daily chart to try to find that. Yeah, that was a couple days ago. So, the gold chart looks very similar to this chart we're looking at right here. This is IAU, which is essentially a gold ETF. We have very distinct rising support coming into declining resistance. This thing is consolidating. The moving averages that I like to watch a lot are extremely coiled. The momentum indicators are about as neutral as you can get. So what's going to happen with gold? Well, it's going to make a move eventually, a big move, to the upside or the downside. How do we determine which way it's going to go? We kind of can't. So trading gold in the last year has been very, very frustrating. But if you use a spread trade, which essentially means you're buying at the money puts and calls at the same strike price and the same expiration, you get exposure to a big upside move in gold and a big downside move in gold. So if you were to look at the money puts and calls for gold, dated out to, I would say June, is probably when we're going to see a break, at least by June. If we came all the way up into this very tight wedge here, I would be very surprised, but we're probably going to see a big move in gold between, I'm going to say, April and June of this year. That's my hot take on the gold chart. Excuse me. Yeah, let's move right along. Gold, looking neutral, not terribly exciting, but it is a chart to watch just because it is so coiled and so ripe for some kind of move. I think if we see upside move, let's just plot out some horizontal resistances here. So here I would call a pretty major horizontal resistance. And then we have a less strong but pretty distinct resistance here as well. If we clear all these, which we haven't been able to do, by the way, since July of 2020, it looks like, before we gave it back in September of 2020, I think we'll see new highs in, obviously, IAU, gold, the gold stocks, etc., etc., etc. So let's move on to a chart I got right this week, for no particular reason. So on Tuesday, Mike wrote about energy stocks. And the energy stocks have been a very interesting story for the past year, especially because, gas prices went up, as we could see. I mean, just watching from around the time oil was going negative in 2020, we're now seeing... What I'm now seeing is that my mic is not down. Sorry for that interruption, folks. So like I was saying, oil has generally been trending higher since we had this major wipeout in March of 2020, the pandemic panic, and then we revisited close to those levels a little bit later that year. But we've just been generally trending higher. And I think it's about time that we make new highs. Well, excuse me, not new highs, new local highs, certainly. We want to get over this late 2019 bump in terms of what we were seeing in the oil price back then. The momentum is strong with oil. We are seeing a little bit of a negative divergence here in the RSI and MACD, though. Bit of a caution sign. We have lower highs, while the price of energy stocks, let's not call this oil, this is energy stocks. That includes things like natural gas. This might even include things like solar and other energy sources. It's making lower highs, or excuse me, higher highs, while the momentum is making lower highs. So that's a caution sign. Generally, though, I think the trend with energy is that it's going to be up in the coming years. And that's something I'm banking on. And let's just quickly look at the moving average cross. We do have the shorter term moving averages crossing above the longer term moving averages, which is what I like to see. For those of you who are new to my work, I like to watch the 9 and 20 EMAs and the 50 simple moving average. When these coil up and cross, tends to preclude some pretty explosive moves. So we just had the two shorter moving averages crossing over the longer one. I think this looks bullish. Energy stocks are coming in a little bit, but you can see that these dips are getting bought pretty significantly. We'll see how the week closes out, but I think energy stocks look bullish. If you watched our monthly market outlook earlier this week, Chad thinks the same. And Chad is much more experienced than me at this. So if we're both thinking the same thing, that's a good thing for energy stocks. Let's look at QQQ. So we posted this chart to our Twitter yesterday, and some very helpful commenter told me that most tech stocks are down about 70% from their highs. That might be right, but we're talking about QQQ here, not tech stocks. QQQ is heavily weighted towards the majors. So stuff like Apple, I believe Tesla's probably in there too. I'm not too educated on what exactly is in here. But QQQ is only off 7% from its highs. So if you're holding energy stocks that are down, tech stocks that are down 70%, you're probably holding the wrong tech stocks, because tech largely, and yes, this is weighted towards the majors, we all know this, Amazon, Apple, Google, what have you, Facebook, it's still in a long-term uptrend. I mean, this is about as clear of an uptrend as you could ask for in this market. Let me take it off log scale so it's a little cleaner. But man, if we hold this resistance, we will see new highs in tech. It's only a matter of time. And you could see just the action on the candles this week. We're looking at the daily candles here. We're picking up on this bottom support. So I think if you are bullish tech, then this is a pretty good spot to add. Now, we have to close the week strong. We don't want to be falling below this blue line, because we haven't really done that since back here, and we've done it a few times. I mean, we've violated this line, but it's always getting picked up pretty quick. So if we get a definitive break below this line, and I'm talking we start going towards 370 level, that's when we'll have to really reassess the trend. But right now, I honestly believe QQQ is probably just going to keep running through this channel. There's a lot of weight on the market right now. No one's going to question that. But I think the majors will continue to perform well. We are getting a bit of a bearish cross here. This is about the opposite of what we're looking at in the energy stocks. We have the shorter term EMAs, the 9 and the 20, crossing below the 50. When that happens, let's take a look at what happened back here. We revisited the bottom of the channel. Let's take a look back here. It's always giving us this chop right at the bottom of this channel. The difference now being, of course, we're already at the bottom of the channel and we're seeing our cross. So could we go lower in tech? Absolutely. Do I think we'll trend higher with tech? Also absolutely. You could take that one, well, I'm not going to say you could take that one to the bank, but you just about can. Speaking of things that aren't banks, boy, if you're a Robinhood IPO investor, well, I'm sorry, because almost nobody that has bought this stock, unless you bought it yesterday, has made money. However, I think it looks kind of knife catchy. I think you might want to catch this knife because this is perhaps the most pronounced positive divergence on momentum indicators I have ever seen in any chart. We have the price just continuing to get crushed and dumped and dumped and dumped, along with a lot of the other growth tech names, the ones that are down 70%, that helpful Twitter commenter told me. This is one of them. But the momentum is building back to the upside. RSI getting less oversold while the price continues to dump. Same with the MACD. The MACD performed a bullish cross right here, and we're still above that line. And the MACD is like, it's just kind of never really been positive for Robinhood, which is a little sad. But it just goes to show how beaten down this thing is. Now, Mike Carr is of the opinion this stock could go to zero. I think that's certainly a possibility. They are a big, shiny regulatory target. They have a lot of problems with how they run their business. As it turns out, reading today's True Options Masters, which will be yesterday's actually, since you're watching this on Saturday, Mike Carr uncovered that Robinhood is a better brokerage platform for smaller investors. It's as good as it is advertised. But for some reason, it tries to conceal that it's not a very good brokerage platform for larger investors. I think that could work to its strengths as a marketing angle. Nonetheless, this is a brave stock to buy, and even braver to buy options on it. But man, if we break this resistance that we're seeing here, we already made an attempt at doing that earlier this week. I think this thing could really fly. But this is one to speculate carefully on. This, I mean, I do think Robinhood could go to zero if it doesn't get its act together. It is really trying to break the traditional financial management model, which is admirable, but it's gotten a little hot water for doing so. So this is not one to bag hold. This is one to trade. And if you are brave enough to catch a knife here, I mean, if we revisit previous all-time high, which I'll admit we only reached it for about a day, that's a 400, nearly a 420% gain, which is pretty incredible. And I mean, that just goes to show how far this thing has fallen. So I'm not saying we're going to go this high again, but someone bought that stock up there. So there is precedent for someone doing it again. Again, I can preach nothing but caution on this. If you were going to trade Robinhood, do it with probably half your typical position size and be ready to cut losses, because this is a volatile company, to say the least. And with that, we're going to wrap up today's chart wash. Felt like a nice short one. All right, I hope you all have a great weekend. Once again, be sure to like, comment, subscribe, all the nonsense you hear from YouTube channels all the time, because that really helps the channel out. And we're trying to put True Options Masters on the map this year, and you can be part of that. Don't forget, especially to comment. I've seen a few comments on these videos, but I would really love to know what you all think of my analysis and what you'd like me to cover in the future. And that's gonna wrap it up. Thanks so much for watching, and have an amazing weekend. We'll be back to you next week.